Thank you for staying with us and welcome back to the last lap of the show. Well, on Thursday, the Nigerian Stock Exchange conducted its first digital closing gong ceremony via Instagram with the management of Sterling Bank, chiefly represented by the Chief Executive Officer, Mr. Abubakar Suleiman, who joins us now to share his experience with us. Good evening, sir. Thanks a great deal for joining us on the show.
Good evening. Thanks for inviting me.
Well, you were the first to have the experience of the digital closing gong with the Nigerian Stock Exchange. Tell us, how was the experience and how different was this from the regular closing gong ceremony?
We're used to being first in many things, so for us it was quite normal. But what that ceremony tells us is that the world has changed, but we can still achieve what we are set up to do. I think that the NSC has shown an example that not only corporations and individuals are adopting technology, but even regulators and self-regulating bodies are also leading. It was an experience. We were able to achieve the ceremony that has been the long-standing ceremony in at the exchange, and it went very well.
So your bank was actually honored with the closing gong for the efforts you're putting in place to moderate the effects of COVID-19 on customers, specifically the 50% reduction in loan restructuring fees for new and existing customers. But that said, how are you looking to mitigate the implications of such losses on your earnings and, of course, your books?
If you are in the banking game for the long run, in difficult times, you must be able to put your balance sheet to serve not just your customers, but the economy. And I think we've demonstrated that, not just in supporting our individual customers, but in coming together to support the federal government in terms of putting resources for the fight against COVID. If you keep thinking only about the short term and the fact that you have to make a profit, chances are that you're not going to have long-term customers. That said, we are also looking at the opportunities created by COVID to essentially reduce our costs where it is possible and still achieve the numbers that we aspire to.
So how have you been coping with business applications during the lockdown? I know a lot of your staff have been working remotely, working from home, but we must have been seeing decline in volume of applications lately. Is that so?
The truth is that the financial services sector is set up to operate remotely, if we're really honest about it. Yes, human beings would like to have face-to-face meeting once in a while, but the bulk of what we do is to process data and take decisions. We process data in terms of payment. Over 98% of the payments that we do now happens remotely anyway. At least they are initiated by the customers from their smartphone or their feature phones. So payment has continued without much disruption. We were a leading bank in terms of lending, digitizing lending. So if you know about our Spectre platform, it allows our customers to initiate requests for loans remotely and we can process instantly. That processed over 50,000 successful loans last year. So again, there's no reason why that business cannot continue. We also built an application to allow customers to continue to invest, the double, and we also partnered with a platform called iInvest for customers to buy treasury bills. Banks are really set up to thrive in circumstances like this, and we are taking advantage of that.
So to what extent are banks like yours now considering investments in government securities? I mean, it was good you actually mentioned investments in treasury bills earlier.
Government securities are part of the portfolio of assets you must hold. And so to that extent, we are required to have a liquidity ratio that is about 30% of our deposit. And government securities is I guess, the best asset in that class. So we will continue to do that. But we're not built to take deposits and lend to government alone. We're actually built to intermediate. We have done a very good job of that. We have consistently lent more than 65% of our deposit. So the loan to deposit ratio set by the central bank is something we've met comfortably. And we'll continue to do that. You cannot grow the economy by just buying treasury bills, and that's not what we are here to do.
Well, Moodys this week actually maintained its negative outlook on Nigeria, which is B2, but says that the capital market remains strong enough to help the federal government in its plans to issue more debts, whether bonds or OMO or T-bills. But we know that the CBN has its restriction on banks in terms of participating as the primary market Those are primary market activities. But do you share this view with Moody's, especially now that the government has actually signaled plans to intensify domestic borrowing?
Moody's view is consistent with what anyone would expect from a country like us that is a major commodity exporter, especially given that we are not just having a battle with the lower price, but we're also struggling with quantity. So that's consistent. And I don't think that rating agencies have any choice at this point. Across board, all the sovereigns in one way or the other have been impaired. Even the strongest are not as strong as they were 6 months ago. So yeah, that view is consistent. In terms of the government's ability to raise money from the local market, it's never been in doubt. Let's not forget that aside the banks, we now have very strong other financial institutions like the pension funds and the insurance. And there are also private investors, high net worth individuals that have increased their investment in treasury bills. So I have no doubt that the government will be able to successfully issue bonds in the market.
But as a bank, do you plan to consider some primary market activities possibly later in the year, given the implications of COVID-19 or coronavirus on your earnings, as well as our income, though?
Interestingly, we just closed a commercial paper issuance, and that was successful. Do we need to? If we have a need for Tier 2 capital or to issue a commercial paper, we absolutely will go into the market. But at this point, our focus is really to double down on the sectors that we have always argued for: health, education, agriculture, renewable energy, and transport. These are the sectors that we focused on as an institution. More than anything else, this crisis has demonstrated that failure to invest in those sectors are almost suicidal. It's something we have to do as a nation, and I think it's something that every financial institution should support.
So the stock exchange has actually given a 60-day extension of time for the filing of quarterly state financial statements. What exactly will your books be looking like for the Q1 of this year? We know it's been very, very dramatic so far.
No, performance, especially short-term financial performance, are going to be moderated. Obviously, it starts with the fact that business volumes have gone down. There are a lot of transactions that have been put in abeyance. And until you process those transactions and you lend those monies to the customers, you can't make a profit. Even payment volumes have also slowed down. There is an impact on government revenue, which also means that if you bank the state or you bank their ecosystem, you would see a reduction in volume over time. So it's fair to expect a performance that would be weaker than what we had projected, and potentially weaker for most institutions than first quarter 2019.
Right. Mr. Abubakar Suleiman, Chief Executive Officer, Sterling Bank, thank you so much for making our time for us on the program this evening. We really appreciate your thoughts, sir.
Thanks for having me.
I appreciate it. Well, this week, on Thursday specifically, the Nigerian Stock Exchange announced another 60-day extension of time for the filing of quarterly financial statements of companies with the March the 31st and April the 30th as their reporting and periodic closure. The new reporting due dates for companies with March 31st as their reporting period is now June the 29th, 2020, while those with due dates of April the 30th is now July the 29th. On that note, we'll draw a curtain on the show for this evening. Thanks a great deal for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye.